Hello, everyone, and welcome to our March 2026 Tuscaloosa Real Estate Market Update. My name is Lee
And I'm Sue.
of Lee and Sue, Your Dream Team, Realty One Group Legends, Tuscaloosa. And today we're going to dive deep into the numbers, the trends, and the unique factors driving one of Alabama's most dynamic housing markets. Whether you're a local buyer, a relocating professional, or investor looking for the next big opportunity, this update is designed to give you the quality and clarity you need to make smart decisions in today's environment. So let's get started.
As we move into the first quarter of 2026, the Tuscaloosa market is entering what we call a stable growth phase. After the volatility of previous years, we're seeing a resilient market with steady appreciation. The average home value has now reached approximately 223,000, while there's a modest 0.7% increase year over year. As you can see in the trend chart, it represents a very sustainable and healthy trajectory. A major catalyst here is mortgage rates, which have recently hit 3-year lows, bringing both buyers and sellers back to the table with renewed confidence.
Home prices show divergent trends. Now, when we look at home prices, we're seeing some divergent trends across different segments. Depending on where you look, medium sale prices are ranging from about $295,000 to over $345,000. This gap really highlights how segmented our market has become. Premium residential properties and student-centric housing near the university are commanding much higher averages than the broader market. The takeaway here is that while the overall trend is sustainable appreciation, you really need to look at neighborhood specific data to understand the true value of a property.
Inventory growth offers more options. One of the most encouraging signs for buyers right now is the growth in inventory. In January alone, we saw an influx of 419 new listings. This is a significant jump, as you can see in our monthly comparison chart. This added supply is finally providing some relief to buyers who have been frustrated by low inventory for years. It's also helping to temper rapid price growth, moving us closer to a balanced market. For buyers, this means more room for thorough inspections and, in many cases, better leverage during negotiations.
And days on market reflect varying demand. The speed of the market, or days on market, is also telling an interesting story. We're seeing a wide range from 30 to 81 days. Homes in top tier school districts or those located in the box near the university are still flying off the shelf, often in under a month. However, overall average has slowed slightly compared to late 2024. This tells us that buyers are being more deliberate and discerning. For sellers, the message is clear. You must price accurately from day one. In this market, an overpriced home will linger while well-priced properties still move quickly.
Record enrollment here at the UA drives housing demand. We cannot talk about Tuscaloosa without talking about the University of Alabama. UA just hit a record enrollment of over 42,000 students, a nearly 4% increase from last year. This consistent growth is the primary economic engine for our local housing market. It has created an unprecedented housing crunch, particularly for properties near campus. Look at that pre-listing rate, 96.8% for the upcoming academic year. That's staggering. It means there's virtually zero vacancies, which continues to drive both demand and property values in the surrounding areas.
And student housing rents reach new highs. This demand is directly translating into higher rents. The average rent per bed has climbed to approximately $965. For investors, these high yields are incredibly attractive, and we're seeing a surge in activity from both individual and institutional players. A key trend we're watching is the renovation of older properties. Investors are buying up older homes near campus and modernizing them to meet the high expectations of today's students. Proximity to campus remains the single most important factor in rental pricing and occupation stability.
Infrastructure projects transform the landscape. Beyond the university, Tuscaloosa is seeing massive infrastructure investment that will transform our landscape. Projects like the Smith Family Center for the Performing Arts and the new High Performance Computing Center are not just about buildings, they're about bringing high-tech jobs and professional grade housing demand to our city. Additionally, the $35 million redevelopment of the Alberta City Corridor signals long-term economic confidence from the city leaders. These projects are creating new hubs of activity that will drive real estate value for years to come.
Strategic opportunities and conclusion. So, where are the opportunities? For investors, student housing remains a blue chip play. For home buyers, new construction in the surrounding areas is offering a great path to ownership with modern amenities. And first-time home buyers, improving affordability, driven by wage growth, is opening doors that were closed a year ago. In conclusion, the Tuscaloosa market is in March 2026 is balanced, stable, and full of potential. Success here just requires a nuanced understanding of these local shifts. Thank you for joining us for this update, and I look forward to helping you navigate your next move to Tuscaloosa. Bye.